Hey guys, hope you're doing well this evening. Just wanted to talk about Nokia for a second as it had a pretty crazy day today as well. As you can see over here, we had the largest volume we've seen in the last, actually, I believe it's 10 years now, right? So yeah, you can see that we had the most volume traded today, over 1 billion shares. That's the most volume we've seen in the past 10 years, right? Now, looking at this chart over here, this is pretty bullish overall. Obviously, today it was a pretty interesting move given that we saw a number of names move to the upside, including AMC, Express, EXPR, also BlackBerry as well, BB, right? But Nokia is interesting because it does have some upside, I believe, anyway. Obviously, do your own research. Everything I talk about is for education purposes only, so make sure that you do your own research, right? But looking at this chart over here, this could be a sign of a nice big breakout to the upside. And so looking at the implied volatility, a lot of people are discussing trading options on Nokia right now. I think that's a mistake because the IV is so high right now that you're paying enormous premiums. Given that the stock price is trading below $10, assuming you want to own the stock longer term, it is more prudent to likely buy the stock instead. So here are a few variables to consider before you make a decision, obviously, and do your own research again. This is just an idea to discuss, right? So the option market is currently pricing in a move by this Friday, so in 2 days, of $3.20, right? So the upside on the stock is about 970 by Friday. The downside would be around $4.30, right? Now the potential move is 530 by this Friday, which is also a massive movement, right? It's almost 100% move in one direction. But that being said, the upside is 1180, the downside is 425 due to the skew right now, right? Now the historical volatility is about 49.9%. You can see that over here in the option chain, right? The current implied volatility is 362.1%. That is massive. You can see the change today. It shot up 227% almost in one day. Now that is absolutely enormous, right? That is implying a daily move right now of about 23% every single day. And the put to call interest here is very, very heavy on the call side at 0.23, right? That means that there are basically 5 calls being purchased per put being purchased, right? Very, very bullish overall. Possible we're seeing a nice big breakout here. Obviously, again, manage your own risk, right? So some things to consider here. The 10-year high was 1175 back on February 7th, 2011. We tapped 979 today, which was also the 5-year high, and obviously the 1-year high as well. That's erroneous right there. So we are seeing a pretty massive breakout today. If we can see some continuation on heavy volume the next few days, we may see a push near $10, right? So I had a trade idea here. And again, do your own research, right? Manage your own risk. But the idea here is because people are trading options right now, and a lot of people are asking me questions about how to trade Nokia, right? Which is why I'm making this video. I'm saying don't buy the options. Instead, buy the equity itself. The equity is below $10. It's cheap equity, right? And the options are very expensive. Case in point, if you want to buy the equity right now, as of closing price today, close at $6.50, right? You can sell the $10 strike covered calls for next Friday's expiration for $2 credit, right? Cost basis on the stock, assuming you're able to buy at $6.50 and sell the covered calls for $2, meaning that you own the stock at an effective price of $4.50, which is right where it was at before it shot up roughly, right? As long as the IV remains elevated over the next few weeks, you can keep selling covered calls. So for example, let's say that Nokia stays around $9 by next Friday and expires just below $10, those covered calls expire worthless. You can then sell another week out at the same strike if you want to, further reducing your cost basis. So for example, if you collect one more dollar, your cost basis goes from 450 down to 350, right? And the nice thing about this is your upside on the trade is pretty phenomenal, right? For a 1 week hold roughly, right? So if the stock is called away at $10 next Friday, you will realize a return of $10 minus 450, which is your cost basis, or 550, right? This means that upside of 550 divided by 450 investment would generate a return of 122% in just over a week, right? Now, possible modifications on the trade, and obviously keep in mind downside risk overall is support area right around over here, which is about $3.23 or so. So there's downside, obviously, if it pulls back. But given the chart right now and the heavy volume, I'm inclined to think we're going to see some more upside. I'm actually long the stock right now as well, by the way, just full disclosure, right? So I'm long the stock right now. And right now, there's a possible modification for the trade if you want to be a bit more conservative. Instead of buying a full position, so let's say, for example, you want to buy 200 shares, right, to be conservative, right? So instead of buying 200 shares, you could buy 100 shares right now, sell the covered call at 10 strike for next Friday, right? Your cost basis is 450. And then also sell one cash secured put at the $5 strike price for 95 cents for next Friday as well, right? So in essence, you're doing a covered strangle, right, on the stock. That reduces your cost basis down to $3.55, which is pretty nice overall because that's right near where support is from November, right? And also a few more considerations. Short float is only at 0.94%. So this isn't a short squeeze candidate stock, in my opinion, right? Obviously, based on the data. Organic buying is required to push the stock higher. Next earnings report should occur in the next couple of weeks. Nokia and Elisa push network boundaries with world's first 1 terabyte deployment. That's an interesting development right now as well. So there's a catalyst right there possibly. And over the next few years, Nokia is estimated to be a big player in the 5G rollouts globally, as well as the Internet of Things, right? So keep these things in mind when you're making decisions, obviously. Everything here is for educational purposes only. Do your own research, right? Only risk you can afford to lose, obviously. And happy trading, guys. If you do like the video, please subscribe, share it with someone else that you think would find value in it. And if you have any questions or comments, please drop them below. Appreciate it. Have a great night. Take care and bye for now.